What's up, everybody? Michael Silva here. We've got some big economic data coming out tomorrow, which is June 3rd. Friday, we have the United States non-farm payrolls, and that can shake up the markets. Consensus is 325,000. The previous was 428. I'm not going to get too much into the data, but what I want to show you here is that when these reports come out, you typically see big pivots in the markets or shifts. I'm taking a look here at three individual assets, the S&P 500. I'm looking at 10-year yield and the dollar, okay? And as you can see here, these are highly affected by this report. You can see the blue vertical lines going down the screen typically mark either big run-ups and or pivots in the market. So are we going to see a pivot where the market starts heading down? Is the yield going to continue to head down here, or is it going to shoot off? Look, it's hard to say. What I like to do is wait for the market to digest. It's important to look for key levels, and that is what we're going to do in today's video. I want to start off by saying that we are starting to see another divergence form here in HYG over SPY, or HYG and the SPY. You can see here this positive divergence where the HYG put in a higher low and the S&P 500 head down. That really set off a nice big rally in the S&P 500, including the one that we saw today. But now we're starting to see a lower high and a higher high there in the SPY. Is that going to matter? Well, I don't know, but it's something to point out. It's just data on the chart. Another small divergence is the XVG, and looking at the S&P 500. The last time we called this out was the bottom right here, and that's when we got this big run up. That was a positive divergence. Now we have a much more subtle, smaller divergence, and that can get negated here come tomorrow. But you can see the XVG is putting in a lower high, where the SPY is, or the SPX is putting in a higher high. So small negative divergence there. Now, a couple other things I want to note. The three horsemen, right? The big dogs that can really move the S&P 500. It makes up for about 50% of the weight of the SPY. Well, that's consumer discretionary, and we have technology, and then also financials, okay? So everything was basically in the green today. It was a low volume. You could see a lot of high interest short stocks really started to ramp up higher. So it was a very, very interesting day overall. But the reason why I want to point your attention to consumer discretionary, technology, and financials is because we are moving into some key levels of resistance and also getting overextended on some charts. So for example, if we take a look at the BP chart for XLK, or the technology sector bullish percent index, take a look here. RSI on this BP chart is moving into that overextended territory. Hey, when we got oversold, right? Not the greatest time to go short, and we started ripping up higher. Wanted to just call out that we are getting overextended there to the upside, which makes it a little bit more difficult to actually find a long position in this particular point. Now, that was really driven today. We had some bad data come out from Microsoft. Big gap down right to the lower risk range, and then we really rallied throughout the day, and that really carried a lot of the other participants in the market too as well, even including Costco. If we take a look at consumer discretionary right here, also to note, right, we had that positive divergence. We're starting to rip, getting almost into that overextended territory, so it looks like it will be hitting that within the next day or so. So we will see there. And you can see here Amazon, right? Amazon is still 3 days in a row touching its upper risk range, just doodling around. Nice big move up today, but it was on lower volume. So is it possible that we see this retouch here come tomorrow? Yeah, definitely possible, and not necessarily probable, but we got to deal with improbabilities here. So taking a look at this big run up, it probably will digest at some point. So just be mindful of that. And then Tesla was also a big participant today in the rally, up 4.68%. Not quite at its upper risk range, but if consumer discretionary wants to continue to push, Tesla and Amazon are going to have to be there to help it. Financials also, BP charts getting overextended, right? So we're talking financials, consumer discretionary, and technology sectors getting overextended on these bullish percent charts via the RSI. Not quite fully, but they're not too far off from getting overextended, right? Tech is, and then also financials. And you can see here, if we look at something like the KRE, okay, this is regional banking, you can see it's still in a downtrend, lower highs, lower lows. This big rip from this low right here, take a look at the volume. The volume has just been falling off a cliff as the market's been perpetuating itself up into that 50-day moving average. So it can press a little bit higher, and that is in confluence with the upper risk range, as well as this trend line that is down sloping. So is it the best area to go long? In my opinion, no, it's not the best idea to go long. We want to give it some time to digest this move and see what's going to happen. This is where you got to be a little bit more defensive here. Okay, let's continue on at a couple more BP charts. BPCOMPQ, this is the Nasdaq Composite Bullish Percent Index, has some more room to go. Looks like it's going to be getting into that overextended territory. Also to note, BPNDX, subtle divergence here, right? So we have a higher high on the BPNDX chart, but then you can see the RSI is relatively flat right here too. Almost overextended territory, but you can see clearly a higher high, and then this is flat, so a little bit of a divergence. Meanwhile, if you take a look at the weekly chart for the Qs, we did bounce perfectly from that 50% retracement level, measuring from the COVID low to the all-time high. And you can see we're back testing that 38.2 retracement level. So we have some overhead resistance, and that to pair also is with a declining 10-period weekly moving average, which tends to be the 50 daily moving average, okay? If we look at the BPSPX chart, also pushing into that overextended territory. Looks like we have a little bit more room to go there as well. If you take a look at the SPY, what are some key levels to watch? Well, first and foremost, let's just call out the volume. Volume was lackluster. This is due to, in part, we're probably just waiting to see what that report is, and we'll see volume come back in. If it's positive, we have some upside move to the upper risk range, which is around 425. That is in confluence with the declining 50-day moving average. And then also to note, we have some prior areas of resistance here at about 430. Now, if you remember yesterday's video, what does that also line up with? Well, that lines up with the monthly 5 EMA. So there's a lot of confluence of resistance up in that area. So if you are a bull, you want to see the month close above 430. That would be very bullish if that were to take place. But we still obviously have a lot of time left in this month. But 424.57 is that monthly declining 5 EMA. So that lines up with quite a bit of levels of resistance right up in this area. So upwards projection definitely can potentially reach up into that area. So that's always a possibility. We'll see what that report brings tomorrow. But just to note on the where's my SPY 15-minute chart? Oh no, do I have my SPY 15-minute? Yes, so the 15-minute chart for the SPY, I want to call out a couple of things here. First and foremost, the trend line that we talked about on yesterday's video is still holding. The bullish momentum in the short term is still up. Why is that? It is above an inclining 5-day moving average. A very important kind of volatility box here to watch is right here. You can see we are trading within a channel. It's just sideways price action. We cracked just slightly above it. But so what it's saying here in the short term is that there's a high probability chance that we can come trade within this come tomorrow, but there's always the possibility that this continues to break out. Now, if we look at a couple other indicators, like the RSI is moving into overextended territory, right? So as this is breaking up higher, you can see that the momentum also here on the PMO, it's diverging, right? Lower high right here as well. So to me, this signals that, hey, can we just pop off a little bit more? Let's see what the market digests. You'll want to see some sort of a back test if that was the case, and go from that point, okay? So as it stands right now, very, very kind of odd area to be in. Just be mindful that if we do get some sort of ripper, right, coming into tomorrow, and that report 425 through 430, like we already stated, is a big area of resistance, also in confluence with a gap fill there too, okay? So be aware of that. Another thing to note is the VIX is breaking down, sending that S&P 500 up. I'm looking at around the 23 handle come tomorrow if we start to rip up higher. I don't necessarily know if it's going to get much down through that, but on a bearish note for the S&P 500, we do have that positive divergence still building out here. So it's a very strong possibility that we shoot back up and back test this breakdown area in a short period of time here. If we take a look at the Qs, not too far off from that upper risk range, and that is in confluence with prior areas of support. So definitely from a run like this, okay, on declining volume, coming into a area of trapped supply, there is a high likelihood that, hey, if you are long, you can always pull some profits off or start to look to position short. We have a declining 50-day moving average coming into this area too. And as we stated, a stronger move up would probably make for a better opportunity to fade, the bullish momentum, bullish feelings that are out there, the bullish narrative, just because of the extended move that we're looking at on these various charts. If you're a short-term trader, that is, right, there's short-term, medium-term, long-term traders. Everyone has to kind of adjust to, you know, what works best for them. If we take a look at the cues on the monthly time frame, right, 327.78 is that declining 5-monthly period moving average, right? So we have wind at our face from multiple angles here. And if I just go back right now to the daily, right, 327, where does that put us? It puts us in confluence right around that 50-day moving average. So can we get outside of it? Yeah, it's always a possibility. But like we already stated, there's some trap supply, big area of resistance. It's going to be hard for the bulls to overtake that, okay? So we will see if they can or if the bears defend that camp. Let's look at the 15-minute time frame. Trend line still holding up at this particular time. We have a negative divergence on the RSI, negative divergence on the PMO. All right, so just be aware, right? It's getting a little frothy, a little extended. Can we get a pop up to the upper risk range? Would you be ready to potentially cover, or sorry, not cover, but potentially, you know, take some profits off the table if you are long, or look to find some short opportunities? You know, that is up to your discretion. The last couple of charts here I want to go over. IWM, big move today, right? A lot of high interest shorts, high short interest stocks got squeezed today. IWM, you can see it's making its way up to that 50-day moving average. I'm still in a short position here. It tagged that lower risk range. We bounced right from that level. I'm going to be holding the short. I plan on covering it if it gets way outside of the 50-day moving average, but I want to see it close above it for a couple of days just to verify it, right? So, I mean, the big reason here is because we're coming into definitely the upper range here of prior support, and that could hold as resistance. So I don't want to cover right above the 50-day, and then all of a sudden, you know, it just goes a little bit higher and then starts to back off. I want to give it, get confirmation, and then if I do get stopped out eventually there, it heads up potentially higher, and then I'm just going to look to re-short it to potentially fade the move or look for weakness and then short it down back through that 50-day moving average is my plan. If we take a look at the 15-minute time frame here, also holding that inclining 5-day moving average and that trend line. We have a negative divergence on the PMO, negative divergence on the RSI, making it a very difficult environment to be trading in. Today, right, we had, you know, pretty much just a V-shaped recovery, but we tagged that, not today, that was yesterday. We tagged that 5-day moving average. We came up, we back test just a little bit, almost tagged it, and then you could see we took off for the remainder of the day. Just everything was kind of getting squeezed to the heavens here. One last thing I want to call out is still on these 15-minute charts. Pay attention to that point of control, right? There's a big volume bar there. We've just been chopping side to back and forth in these ranges. All right, so strong moves to the downside, strong moves to the upside. Do not be surprised if we start getting, you know, some bearish momentum or big pulls back to the downside where we retest some of these levels. It's likely to happen. Whether that's tomorrow or not, I couldn't tell you, but just got to be on guard. Be on guard right now, okay? Like I say, and I say often, you got to be very mindful of risk, right? These markets move between contraction and expansion. And right now we are in an expansion phase, meaning volatility still rather elevated. We're getting big swings back and forth, which makes it hard to manage risk. So you got to be looking for key resistance, key support. That's what we discussed on today's video. Until price starts to tighten up really tight, right, where it gives us a good risk to reward. I mean, I'll tell you when I see it, but as of right now, it's hard to find. Last thing that I want to call out is if you haven't signed up already for the newsletter, I plan on opening up a free chat room on my Discord, right? I have a paid one that's here on Trade Ideas, but if you want to subscribe to the newsletter, you would just click the link in the pinned comments or in the description. You click this, and then you just type in your email and hit submit. And then I don't have any emails to send out at this particular point in time, but maybe a stock of the week I'm thinking. But then I'll also let you know when I start putting together that free Discord channel for everybody too as well. All right, everybody. Hope that helps. See you later.